Hello students, November 23 ain't the most awaited event of your life. Hmm? So without wasting time, we'll start with the business. I'm going to discuss with you RTP. I'm going to discuss RTP with you, and all concepts will be discussed. See, we have already covered everything in detail, but there can be a few points which I would prefer discussing now additionally. So here we go with the first question, which is based on material costing. Following details are related to a manufacturing concern. Reorder level is given to be 1,60,000 units. Economic order quantity is given to be 90,000. That means at 1,60,000 units, the moment your stock level reaches 1,60,000 units, you place an order for 90,000 units. Minimum stock level is 1 lakh units, maximum stock level is 1,90,000 units, average lead time is 6 days. Difference between minimum lead time and maximum lead time is 4 days. And we are supposed to find out maximum consumption per day and minimum consumption per day. Now guys, if we need to know the maximum and minimum consumption, you must have realized one thing, this is a reverse question. Ideally, they give you consumption and lead time and they ask you to decide stock levels. This time, they have not given you lead time completely, they have not even given you consumption properly, and they have asked you to go for something which is always mentioned in the question. So it's a reverse question, and I have told you 1,000 times, whenever it is a reverse question, it is always easy to tackle. It is easy to understand, it is easy to implement. Trust me. How? Something which is normally given will be missing. We don't have a clear information about lead time, and therefore, something which is normally not given will be available. Generally, stock level we calculate. This time they have given you stock levels. Correct? They say average lead time is 6 days. Okay, so I'll start with something which is vital for me now. Average lead time is maximum plus minimum, maximum plus minimum upon 2, maximum plus minimum upon 2. How much is the average lead time given? It's 6 days. Now, we don't know how much is maximum, we don't know how much is minimum, but if I see the information, maximum is, read this, difference between minimum and maximum lead time is 4 days. So, if I assume minimum to be X, maximum will be X plus 4 divided by 2. So, we have 12, 2x plus 4. So, 8 is equal to 2x, x is equal to 4. That means your minimum lead time is 4 days. So, maximum will be 4 plus 4, 8 days, and if you can find out, if you want you can verify, 8 plus 4, 12 divided by 2, average is 6. Okay, so this is what we got. So we have minimum lead time, maximum lead time. We have minimum lead time as well as maximum lead time. We have that information with us. So now we can go for the given formulas. How much is ROL? If you recollect, for ROL, we always go for conservative formula. And my conservative formula says your maximum consumption requirement is this multiplied by the maximum time you have to wait. Now they have given you reorder level as 1,60,000. They have given you reorder level as 1,60,000. Maximum consumption we don't know. But maximum lead time is available with us 8. So maximum consumption will be 20,000 units. Maximum consumption will be 20,000 units. This is your first answer. Now, the next requirement is minimum consumption, and minimum consumption is always needed in the maximum level of stock. Listen to me carefully. At reorder level, you place order for EOQ, and meanwhile, you keep your consumption minimum for minimum lead time. If you consume minimum, your stock will be maximum. If you consume less, you will be left with more. How much is maximum level of stock? How much is maximum level of stock? 1,90,000. Your maximum level of stock is 1,90,000. Reorder level is 1,60,000. Minimum consumption is something that I don't know. Minimum lead time is 4. And how much is EOQ? 90,000. So I am left with 1 lakh here. 1,90,000 minus 90, I am left with 1 lakh. 1,60,000 minus minimum consumption into 4. So I'll take minimum consumption into 4 to the left hand side. 1,60,000 minus 1 lakh will be 60,000, and that gives me minimum consumption to be 15,000 units. It is that simple. Always remember one thing, start with something which is usually not given. That will give you the success. So this is minimum consumption 15,000. And this is maximum consumption. Maximum consumption, minimum consumption. That's your answer. First, maximum, and then your next answer is minimum. Is this clear? So that was your first question on material costing, which was very simple. It was little tricky, but you know how to tackle with reverse question. Something which is normally given will be missing. So you find out something which is normally not given, but it is mentioned. Something which is normally not given will be mentioned. Take it as a starting point, use it. Just say ROL is normally not available. I used it to get the answer. The balancing figure was maximum consumption, and later on in the maximum level stock formula, we could find out minimum consumption as well. So that was question number 1. In question number 2, they are talking about employee cost. A skilled worker is paid guaranteed wages at the rate of 120 per hour. This is an hourly rate available. The standard time allowed for the job is 6 hours. 6 hours is nothing but your time allowed. He took 5 hours to complete the work, time taken, and he is paid wages under row 1 scheme. Calculate effective rate as per row 1. Hey, effective rate, you should know effective rate by now. Effective rate means total labor cost divided by time taken. Total labor cost divided by time taken, and since we are going for row 1, time taken into rate basic, time saved into rate bonus, and since it is the bonus will be in the proportion of time taken upon time allowed. This information gives me total labor cost as per row 1, and total labor cost when it is divided by time taken, I'll be getting the effective rate. So guys, 5 hours is the time taken, 120 is the hourly rate, 5 hours is time taken, time allowed is 6, time saved naturally 1 hour, and the whole thing will be divided by 5 hours. So 600 basic, 100 bonus divided by 5. 700 you are paying to this worker for 5 hours. So it is as good as the worker is earning at the rate of 140 per hour. See, the hourly rate is 120 only. But after considering the bonus, it is as good as you are paying the worker at the rate of 140 per hour. That's effective rate calculation. Total labor cost, I have paid 700 as per row 1 system for 5 hours. That means the worker has effectively earned at the rate of 140 per hour. That is my first answer. What is asked in the second part? If the worker is placed under Halsey's system, and he wants to maintain the same effective hourly rate, calculate the time in which he should complete the job. That means time taken is going to be different. The stipulation here, the condition here is your effective rate should remain same. Your effective rate should remain same. If I assume time taken to be X, time taken into rate plus 6 hours are allowed. 6 hours are allowed. Out of 6 hours, X hours are taken. This is time saved multiplied by 120. And I am supposed to take 50% of it. Are you clear with it? Divided by time taken. We don't know how much is time taken. I assume time taken to be X. So time taken X into 120 will give me basic. Now 6 hours are allowed. The worker has taken X hours. That means time taken must be lesser than time allowed. So 6 hours minus X hours will give you time saved multiplied by rate 150. And since it is Halsey's system, we have to go by 50%. So 150x is equal to 120x plus 50% of 720 minus 120x. So if I consider these two, I will be left with 20x here. I apply 50%. 60x will be taken to the left hand side and it will be 80x, 360. So x is equal to 4.5. That means ideally The calculation says that if you want to maintain the same effective rate, you have to get things completed in 4.5 hours. You understood this? Hourly rate, effective rate is total labor cost divided by time taken. It is 140. I want to maintain 140. And time taken is to be revised. I assume time taken to be time taken has to be lesser than time allowed. Then only there will be a bonus. There will be a time saved. So 6 minus x is time saved into 120 is a timely rate. 50% of it will be given. So x should be 4.5. So the team should complete. So to get the same effective rate, worker must take 4.5 hours. Workers must take 4.5 hours to complete the task. Workers must take 4.5 hours to complete the task. You can apply these. You can take the screenshot if you want. This is the answer for the first part. And this is the answer for the second part. This is the answer for the second part. So that's your second question of labor costing. Let's go for the third one. Aha! Overhead absorption. The most awaited chapter. In this question, they have asked us to go for machine hour rate. Machine hour rate is cost of using one machine for 1 hour. Cost of using one machine for 1 hour. So accumulate all total expenses related to the machine divided by total number of machine hours to get the calculation done. Let's read it. The following particulars refer to the process used in the treatment of material subsequently incorporated in a component forming part of an electrical appliances. The original cost of the machine is 10 lakhs. Its estimated life is 10 years. Scrap value is 10. So 10 lakhs cost minus 10,000. 99,000 per annum, because your rate is, your estimated life is given in terms of years. So 99,000 per annum is the depreciation. Estimated working life is 50 weeks. Each week consists of 44 hours, out of which machine maintenance etc. is estimated to take up 200 hours. Now, whenever there is a maintenance, it's a periodic maintenance which is always an unproductive time. Maintenance means periodic maintenance. Periodic maintenance means I'm not interested batch-wise maintenance. Once in 3 months, once in a week, once in a month, once in a period of 6 months, machine maintenance will be taking place. That means what, how much I am producing, how many batches I am producing, all these things will not matter to you. If there is a maintenance after every batch, that is called as setup phase and which can be taken as productive. But here it is a periodic maintenance which will be completely considered as, unproductive time. So my total productive time comes out to only 2,000. No other working loss is expected. Setup time estimated 100 hours is regarded as productive time. Okay. So you have 100 hours setup time which is considered to be the productive phase. Okay. Electricity used 16 units per hour. 1 hour if you use the machine. If you use the machine for 1 hour, 16 units of electricity will be used and each unit cost you 7. So can I say 112 per hour is your electricity cost. 112 per hour is your electricity cost. No power is used for setup. Okay. The machine required a chemical solution which is replaced at the end of week. Per week it is. If it is per week, that means it is definitely to be taken as a fixed cost. If it is per week, that means definitely it is to be taken as a fixed cost. Estimated cost of maintenance per annum, again a fixed cost. Two attendants control the operations together with 5 other identical machines. There are total 6 machines. 5 other identical machines means there are total 6 machines handled. Weekly wages are 9,000. Departmental and general works overheads allocated to this machine of the current year amounts to 20,000. Okay. You are required to calculate machine hour rate of operating the machine. Guys, if you decide number of hours structure, you will realize total hours were 2,200 minus maintenance time, which is always unproductive because it is not phase wise. It is general maintenance, periodic maintenance. So for us, our total productive time will be 2,000, which has 100 hours of setup time and 1900 hours of running time. Both are productive phases. If both are productive phases, both are to be charged to the customer. And if you are supposed to charge both to the customer, naturally you should have 2 different rates. So this is your dual machine hour rate calculation, or you can say 2-tier machine hour rate calculation. 2,200 hours were available, 200 hours are unproductive because it is a periodic maintenance. So 2,200 hours are productive. My entire calculation henceforth will be based on this. But then further I have realized, I was made understand one thing, that 100 hours was setup time, and if 100 hours is a setup time, it is also given to be productive. So there are 2 productive phases. One is setup, the other one is running, and the cost of running and setup will be different. We can clearly see there is no electricity cost incurred for setup. We have discussed that in detail in the classroom. So many examples we have taken. So setup and running are 2 different things. Setup and running are 2 different things, but both are productive. Both phases are productive, both should be charged to the customer. If both phases are productive, both should be charged to the customer. And if there are 2 phases, there will be 3 types of cost structures involved. One for setup, one for running, and one is a fixed cost structure which doesn't get affected with any of the phases. So that was my working note 1. Working note 1, which talks about hours breakup, and I have realized that 2-tier machine hour rate is to be applied. Now, since I told you there are 3 types of costs involved, one for setup, one for running exclusively, and there will be one cost which will be a fixed cost. So now the first thing first, we will have to find out, fixed overhead absorption rate. We'll have to first find out fixed overhead absorption rate. accumulate the entire fixed cost which is available in the question, and I can see for this you need to start with the question once again. Don't haywire, don't look here and there, please follow the format, follow the question. My first information, first 2 lines, there is no cost to be recorded. Then I am going for point number 1, and in point number 1 I have one cost to be recorded, and that is depreciation. $10 lakhs, 10,000, 10 years. 10 lakhs, 10,000, 10 years. 10 lakhs, 10,000, 10 years. So 99,000 is my depreciation per annum. I am going for per annum data only because my number of hours are also given for 1 year. My next cost structure is electricity, which is only on hourly basis. I'll skip that, I'll add it later. Chemical solution, 2,000 per week. How many weeks are involved? 50 weeks. Chemical solution. $2,000 per week. $1 lakh will be the cost. Maintenance 1,20,000. Maintenance cost 1,20,000 straight away per annum. Operator's attendant. Weekly wages are 9,000. Operator's wages. $9,000 per week. Into 50 weeks. This is to be paid to one person. There are 2 operators. So 9 lakhs will be paid. But in 9 lakhs, they are handling 6 machines. Now, this is what generally students do when they don't read the question properly. Now, please come back to the question and see what they have mentioned. Look at this. Their combined wages are 9,000. That means 9,000 is already paid to both. 9,000 is already paid to both. You simply apply 50 weeks. So 4,50,000 and 1,600, because this is going to be the cost of all 6 machines. So instead of 1,50,000, it will be 75,000. You understood the mistake? It's a common mistake done by many people. It's a common mistake done by many people. If it was 9,000 per attendant, then 9,000 into 50 into 2 into 1/6. The question that we have in the classwork had per worker per week remuneration. So in 2 weeks, into workers we have done. Here they have used the term combined. So this is the differentiating point. I hope you understood this. And it's not that I have gone wrong, because I have an option of editing things. But I purposely did it because I want you to get it highlighted. Combined wages of both 9,000. So 9,000 into 50 for all 6 machines, 1/6. Had it been 9,000 per person, then 9,000 into 50 into 2, and then I would have applied 1/6. Since it was a cost of 6 machines, 5 other machines are also handled. 5 other, that means total 6 machines are handled. I am interested in cost of running 1 machine for 1 hour. and departmental and general works overheads for the current machine 20,000. Okay. General overhead 20,000, this is the total fixed cost available. So 75,000, 20,000, 1,20,000, 1 lakh and 99,000. 4,14,000. This is your total fixed overheads. I am telling you the simplest method of solving any question based on 2 tier. Your fixed overheads will always be divided by total productive hours. I am not interested to know, I am not at all interested to know whether it is a running phase or a setup phase. I don't care, because there are certain expenses which will be incurred irrespective of the phases. Now, do you think all this depreciation, solution, maintenance, wages, general overheads are going to get affected with the running and setup? No. So, I need total productive hours for this calculation. So, my fixed overhead absorption rate is 207. My fixed overhead absorption rate is 207. Are you getting me? Now, apart from this, there is no other cost available. There is no variable cost given. If there is a list of variable overheads given, you take the total of all variable overheads and divide that by running time. If you do that, you will be able to get a variable overhead rate. And now I can go for statement of machine hour rate. Since they have clearly said that setup time is also productive, I need to find out separate rate for running time as well as setup time. I need to find out running time or setup time separately. Now, as far as fixed overhead absorption rate is concerned, whether it is running phase, whether it is setup phase, I am going to spend 207. But I have a separate cost which is already on hourly basis, electricity expenses, 16 units per hour into 7 per unit. This will be exclusively incurred for. This will be exclusively incurred for running phase. So 319 and 207 will be 2 different phases. 319 and 207 will be different phases. If they would have said that setup time of 100 hours is unproductive, then there would have been only one phase productive 1900 hours, and entire calculation would have been done based on 1900 hours. But since there are 2 phases, your answer should be solved like this, if there are 2 phases. So, I hope you guys have understood this. Guys, there are 2 productive phases, there cannot be one single rate. Alternatively, ICI has given you a different solution in RTP, doesn't matter. This is what we have done, this is what is right. In that, they have calculated a combined rate, but that's fine. You have 2 productive phases, that means 2 different rates must be charged to the customer, one for running, one for setup. Whenever this situation arises, you have to consider 3 cost structures. Fixed cost will be accumulated and that will be divided by 2000 because it has got nothing to do with running time and setup time. Then if you have variable cost given, divided by 1900 hours, which will be charged only to running hours, running time. And as far as electricity is concerned, since I already have per hour structure, it is directly added to running time, because question has clearly told you setup time, even if it is productive, power is not required, electricity is not required. So we can't charge electricity to set up time, and this is what two different rates will be available. So if you are undertaking a job where 100 hours are required of running phase and 20 hours are required of setup phase, this into 100, this into 20 will give me the total overhead of each segment. Okay, if setup time was unproductive, bachcha log, then in that case, even this 100 would have got deducted from 2000. There would have been only one productive phase of 1900 hours. Your entire fixed cost structure would have got divided by 1900 hours, because there is only productive time, and that is 1900 hours. You would have got some different rate. I would have added 112 to that as power, and I would have got the total cost. So this is what the solution should be. This is what the solution is. Your first working. Both are productive phases. So this is your solution. Next question is question number 4, which is an extension of absorption costing, which is known as activity based costing. L Limited manufactures 3 products, PQ and R, which are similar in nature and are usually produced in a production run of 100 units. So your batch size is 100 units. Product P, R require both machine hours as well as assembly hours, whereas product Q requires only machine hours. The overhead incurred by the company during the first quarter are as under: machine department expenses, assembly department expenses, setup cost, stores receiving cost, order processing and dispatch, inspection and quality control. You have 6 different cost structures given, along with some basis. Machine department, assembly department, setup, stores, other processing and inspection. 6 types of cost. Units produced and sold are given to you, guys. So I think we can find out number of batches. We can find out number of batches. Point number 1, number of batches. Point number 1, number of batches. P, 15,000 units divided by 100 units per batch, 150. Q, 12,000 units. Hundred units per batch means 120 batches. R, 18,000 units. 18,000 units, if I talk about, hundred units per batch, 180 batches. So there are total 450 batches executed. 150 for P, 120 for Q, 180 for R. You can copy this. Then the machine hours worked, 1,32,000 hours. 1,32,000 machine hours. Then 42,000 labor hours, assembly hours. 3,750 customer orders and 120 requisitions. Requisitions means order placed. Requisition means order placed for material. So, anything related to material orders, will be considering this as a base. Prepare a statement showing detailed overhead costs allocated to each product type using activity based costing. Now, activity based costing, when you follow, guys, you need to understand the simple format. You have to go this way. Your first column will always be an activity column. All expenses will be recorded. So, we have 6 different heads, 6 different expenses will be recorded. Then we will write cost pool. Cost pool is a total cost which is considered. Then we need the base, which is also known as cost driver. Then we calculate rate of cost driver. Trust me, in every question of activity based costing allocation, first 4 columns are fixed and next columns will be decided by number of units produced and sold. So, if you are producing 2 products, it will be 4 plus 2. If you are dealing with 3 products, it will be 4 plus 3. If you are dealing with 5 products, it will be 4 plus 5. If you are dealing with 1 product, it will be 4 plus 1. But first 4 columns will be same. So, you have machine overheads 18,48,000. Naturally, machine hours will be the base. So, 18.48 lakhs divided by 1,32,000. 14 rupees per machine hour is the cost. And now, once you know rate of cost driver is 14, 30,000, 48,000, 54,000, 3 different machine hours information into 30,000, 48,000 and 54,000. 30, 48 and 54,000 into Chintu 14 per machine hour will be applied. Your next cost structure is assembly hours. Assembly hour cost is 6,72,000. 6,72,000. For this, assembly hours will be taken as a base. Assembly cost will be divided by assembly hours. So, 6,72,000 divided by total 42,000. We already know 42,000 is the total time, total assembly time. So, 6,72,000 divided by 42,000, 16 per unit will be given. And now, if 16 per hour, 16 per assembly hour is the cost, 15,000 and 27,000 hours will be applied. 15,000 and 27,000 hours will be applied. So, 2,40,000 and 4,32,000. This is what you are supposed to do. Understood this? So, for machine department, machine hours will be the base. For assembly department, assembly hours will be the base. For setup cost, number of batches will be considered as a base. For inspection, number of batches will be considered as a base. See, after every batch, there is a setup. Setup phase is a phase where you set the machine up or the infrastructure up for the next production run. So, if there are 5 batches, there will be 5 setups, because after every batch, you will have to undergo setup process. So, 5 batches, 5 setup, 10 batches, 10 setup, 20 batches, 20 setups. So, number of batches should be taken as a base. And for inspection also, if nothing is mentioned, it can be simply assumed that after every batch which is processed by you, which is produced by you, inspection process will be carried on. Your one batch is of 100 units, any random 10 units will be picked up, they will be checked, inspected. If the team is satisfied, it will be dispatched, otherwise it will be sent back to the factory for rework. So, we can always assume that setup cost, yes, it is always based on number of batches, but even inspection cost will be charged on the basis of number of batches. So 90,000 divided by 450 will give you one rate which will be applied on 150, 120 and 180 batches. Same thing, 36,000 divided by 450 will give you some rate which will be applied on 150, 120 and 180 batches. As far as stores receiving is concerned, number of requisition is important and number of orders processing and dispatch. Anything related to dispatch is related to customer. So, anything order processing and dispatch, when it is available, it will always be based on customers' orders executed. Number of requisition raised. I will raise requisition when I need the material. So, it will be charged on the basis of number of requisition. And finally, your statement will look like this. Here are the rates calculated as I discussed, and those rates are to be applicable, those rates are to be applied on the respective basis. Look at this. Your rate is applied on batches, then it is applied on number of orders, it is applied on customer processing and dispatch. So, you get final cost allocated, and once you get the final cost allocated, divided by quantity 15,000, 12,000, 18,000 to give you overhead per unit. So, I already have overhead per unit which includes production overhead, which includes admin overhead, which includes even selling. Other overheads can also be included in it. So, if they tomorrow ask you to find out total cost, simply add direct cost, prime cost to this. Add material per unit, add labor per unit, you will directly get the total cost, if it is asked. They have asked us what will be the overhead allocated to each, each product. So, I have not stopped at total, I have also found out per unit rate. If you want, you can stop at total also. So, you can take the screenshot of this. Yes. So, that was your question based on activity based costing. Next question is cost sheet, just about allocation, nothing special. In past so many attempts, they are asking only classification based question on cost sheet for 10 marks. One more to go. A Limited produces a single product X during the month of July 2023, and company has produced 14,560 tons of X. So, that is quantity manufactured. The details for the month of July 23 are as follows. Material consumed will be classified as RMC. Power will be direct expense. Diesel consumed during operating production machinery is also considered as direct expense. Wages and salary, direct wages, gratuities associated with workers only. Hire charges will be considered as direct expenses because they are basis of production. Hire charges paid for cars used for official purpose. Now, that is definitely something called as admin, but it is admin general. Reimbursement of diesel cost is also admin general. That means you are basically spending 1 lakh on traveling, which has 5% GST without credit. Even GST will be part of admin general. If there was credit available, we would have ignored that 5% adjustment. Higher charges are 80,000, reimbursement of diesel cost is 20,000. That means total cost incurred for traveling is 1 lakh. So, 1 lakh plus 5%, 5,000 will be added as admin general. Maintenance cost paid for weighing bridge used for final goods at the time of dispatch. So, that has to be selling and distribution. Since AMC cost, annual maintenance cost of CCTV installed in weighing bridge and factory premises. So, weighing bridge is selling and distribution, and factory premises is definitely your admin related to production. Annual maintenance cost it is not of machine, it is of CCTV installed. So, it is admin, but related to production because it is set in factory premises. Hotel bills of sales manager, selling and distribution overheads. Prepare a cost sheet for the month of July 2023. There is nothing to be discussed in this. You already have the solution. The classification was the only important part here. Now, one more similar question. Since it is related to cost sheet format only, I am doing it immediately after question number 5. Question number 6 will be done later, but this is related to same cost sheet concept. So, we will be handling this first. SM Motors Limited is a manufacturer of 2 components, and following are the details. Opening stock of raw material, then closing stock of raw material, purchase of material, direct labor, factory overheads, admin. During the financial year 2023-24, the company has received an order from a car manufacturer where it estimates that cost of material and labor will be 80 lakhs and 40 lakh 50,000 respectively. The company charges factory overhead as a percentage of, factory overheads will be charged as a percentage of labor, and admin overheads will be charged as a percentage of factory cost. Cost of delivery of components at customers' premises is estimated to be 4 lakh 50. That is an additional, I would say, selling and distribution cost incurred. Calculate overhead recovery rates based on actual cost, and then prepare a job cost sheet for the new order where material is 80 and labor is 40 lakh 50,000. Very simple. You need to first find out overhead absorption rate of factory overheads and admin overheads. For that, you need the basic cost sheet, you need the actual cost sheet, and here we go. Yes, we have opening stock, purchase, closing stock, we got material consumed, then labor, then factory overheads, and then factory cost. Your admin, your factory overhead was based on wages. So, factory overheads upon wages into 100, 34%, and your admin overheads of 20 lakh 50,400 was based on, your admin overheads was 20 lakh 50,400, that was based on factory cost. So, on the basis of the old cost sheet, we got these percentages which are simply supposed to be applied here on the new cost sheet. 80 lakhs, 40 lakh 50,000 as per the information, 34% of labor will give you overhead. So, there is nothing new to be discussed. Once you get factory cost, apply 6.91% which you calculated here. You got admin overheads. Cost of delivery will be 4 lakh 50,000 which will be directly added at the end. Profit was 25% on sales. 25% on sales means whenever sales is 100, profit is 25, cost will be 75, and you have to go for cross multiplication. So, 1 crore 48 lakh 04806 divided by 75%. 1 crore 97 lakh 39,741 will be the cost. Or you can say 1/4 on sales is 25 upon 100 on sales. So, 1/4 on sales. 25 by 100 is 1/4 on sales. Sales is 4, profit is 1. That means cost is 3. Cost is 3, 1/3 on cost can be applied. That's it. That was your simple calculation of cost sheet, but in the form of job costing. Prepare actual cost sheet. No percentage of factory overheads on wages, no percentage of admin on factory cost, and then prepare latest cost sheet to get the cost structure. It was very simple. Since this was also based on the cost sheet format, I covered it along with question number 5. Is this understood? Great. The next question is about reconciliation. Question number 6. The financial books of the company reveal the following data. We have opening stock of finished goods as well as work in progress. Then we have raw material consumed, direct labor. We have factory overhead, admin overheads. Admin overheads are related to production. Then we have dividend paid, bad debts, selling and distribution overheads, interest received, rent received, sales, closing stock of finished goods and work in progress. Cost records show the following information. Factory overheads are absorbed at the rate of 70% of wages. Admin overheads are 15% of works cost. Selling and distribution is 6 rupees per unit sold. Opening stock of finished goods is 240 per unit. The company values work in progress at factory cost for both financial as well as cost reporting. If your WIP is valued at the same price for financial and costing both, that means the value will remain the same in the books of accounts. They have asked us to prepare statement. They have asked us to prepare statement of financial profit and costing profit and then reconciliation statement. Now guys, please understand, if they have asked you to prepare statement of financial profit, you cannot prepare an account. So first thing first, statement of financial profit and loss. It starts with sales. From sales we deduct cost of goods sold. When I talk about cost of goods sold, it has opening stock of finished goods, opening stock of WIP, it has raw material consumed, direct wages. We don't have direct expenses, so we will directly add factory overheads and then we will subtract closing stock of finished goods and closing stock of WIP. This will give me cost of goods sold, and if I subtract cost of goods sold, I'll be able to get gross profit. Now let's find out these figures. Opening finished goods 106, 250 and 92. 1 raw material consume also we have 1680, labor 1220. 1680 1220 8,44,000 factory overheads. Closing stock 91,300, 82,400. 91,300, 82,400. $37,68,550 COGS. How much is your sales given? 45,60,000. 45,60,000 is sales given. 791,450 is going to be your gross profit. Then to this we add operating income, sale of scrap or something like that, but we don't have such income here. Then we have operating expenses. In the form of operating expenses, we have admin expenses and selling and distribution expenses. Admin 396, 144. 396, 144. 396. So 5,40,000 will be your operating expenses to be subtracted. $791,450 minus 5,40,000. 251,450 is your net operating profit. To this we will add non-operating income. The income which is not in the due course of the business, the income which is not regular, not from the main activity of the business, and we have two such incomes available: interest and rent, 7692. Interest received, rent received, 7692. $76,92. 1,68,000 to be added minus non-operating expenses and all, dividend and all we have, so we can directly write other expenses. There is no need to get into detail now. You have bad debts, and I think you have dividend. How much is bad debts given? Bad debts 36, dividend 244. Bad debt 36 and dividend 244. Bad debt 36, dividend 244. 2,80,000. $139,450. 139,450 is my profit as per financial records. Net profit. See guys, they have clearly asked you to prepare a statement. You can't prepare an account. Please understand this. No matter what they have solved in RTP, just think logically. Examiner is asking you to prepare a statement of financial profit. How can you give an account? If they ask for a statement, you better go for a statement because they can deduct your marks. Don't take risk. Any which way, your final answer is same, so it doesn't matter. In fact, you have fulfilled the requirement of the examiner by preparing the statement, so don't worry about it. Now, as far as cost sheet is concerned, well, cost sheet starts with quantity structure. We do have quantity manufactured given in the question, but we do not have quantity sold, and for that we have a very simple format. Opening stock of finished goods plus quantity manufactured minus closing stock of finished goods, we get quantity sold. Well, your opening stock quantity 625, sales 12,615. 625, 12,615. 12,615. and this is I think what, 415. Yes. So despite of selling 12,615, you still have 415 with you, but 625 were already with you. So 12,405 must be your quantity manufactured. 12,405 must be your quantity manufactured. Is that clear? So as per financial records, you have a profit of 139,450, and for cost records, if you want to find out profit as per cost records, you need to go for cost sheet. So title will be cost sheet for the year ended 31st March 2023. That's my total column. This is my per unit column. I have to begin with quantity manufactured and quantity sold. 12,615 units is quantity sold, and 12,405 units. How do you know? Working note 1 is your quantity manufactured. You understood this? Profit as per cost records, and that too by a statement. Why you want to go for any other statement when you directly have cost sheet with you? Now, raw material consumed and direct wages are not separately given as per your cost records. So we can pick up the information directly from the financial data. 16,80,000, and I think labor was 12,20,000. There is no direct expense to be recorded after this. $29 lakhs is the prime cost. If they have asked you to prepare a statement of profit as per cost records, please prepare cost sheet itself. There is no need to go for any other statement. For factory overheads, they have clearly specified. For factory overhead as per cost records, they have clearly specified it should be 70% of wages. It should be 70% of wages. $12,20,000 into 70%. $8,54,000. That gives me 37,54,000 as gross factory cost. I need to add opening WIP, I need to subtract closing WIP. You please write full forms. For opening and closing WIP, they have clearly specified that figures as per cost records and financial records will be same. So my opening WIP 92,000 and 82,400 closing. 92,000 and 82,400 closing. 92,000 will be added, 82,400 will be subtracted. 37,63,600 is my factory cost. about admin overhead. See, quality control R&D is not there. Directly we have admin related to production, which is 15% of factory cost, which is 15% of factory cost. So 3763,600. $564,540. 564,540 is your admin overheads related to production. There is no primary packing, there is no sell of scrap, so you can directly get the total. It will be 43 lakhs 28,140, and that is your cost of production. As far as opening stock of finished goods is concerned, 625 units we have. Question has clearly told me to value opening stock at 240. Question has clearly told me to value opening stock at 240. So 240 multiplied by 625. 1,50,000 will be the value of opening stock. And guys, if you recollect, as far as closing stock of 415 is concerned, we need not follow anything. It is always valued at current year's cost of production. 43, 28, 140 divided by 12,405. So 348.90 approximately. So 348.90 approximately when you apply, you get 144,794. You get 144,794 as your closing stock valuation. In the absence of information, FIFO method is followed. FIFO method means first in, first out. So your opening stock will always be sold first. Your opening stock will always be sold first. So that means at the end of the year, whatever you are having, that has to be out of your current year's production. So current year's production was at 348.90 per unit. Such 415 such units are left with me. So 43 lakhs, 33,000. 346 will be my cost of goods sold. And after that, I need to go for selling and distribution overhead at the rate of 4, if I am not wrong. No, it is 6. After that, I am supposed to go for selling and distribution overhead, which is 6 per unit. Now, if it is 6 per unit, please remember, $343.51 is the CPU by dividing it by quantity sold, because it is cost of goods sold. Now 6 multiplied by 12,615. 6 multiplied by 12,615. 75,690. 44 lakh 9,036 is cost of sales. profit and then sales. They have not mentioned that sales is different in both the records. So naturally sales will remain same. How much was your sales value? 45,60,000. 45,60,000. 1,50,000. 1,50,000. 964 will be the profit. You can always fill the CPU column as per your convenience. I always wanted cost of production per unit to value the stock. Till cost of production, use quantity manufactured. After cost of goods sold, use quantity sold. So guys, you can take the screenshot of this. First of all, you take the screenshot of this part, financial P&L. Then you take the screenshot of the balance part. That gives you complete financial statements. They asked for statement, we gave the statement. Now they are asking for this part, so kindly give them cost sheet. You can't have any other statement. Take the screenshot of this and then take the screenshot of balance part. Now they have asked us to go for reconciliation. For reconciliation, do not go for any method, difficult method where you are supposed to remember so many things. See, for the first time, I am asking you to apply magic instead of logic because I want to save your time. Your time will be saved and you can get an accurate answer. Now the working says, what have they asked in the question? Statement reconciling profit as per cost records with finance. That means they have clearly told us to start with cost records. So I will have cost first, then finance, then difference, and then effect. I have working note here. Now start comparing things. Raw material consumed and wages are same in finance and costing both. Factory overheads 8,54,000. Factory overheads 8,54,000 in costing and 8,44,000 in finance. I am starting with costing figure first, then financial figure. Difference is positive 10,000. If the difference is positive, it is to be added. It is that simple. Then I have WIP cleared. Admin overheads 564, 540. Admin overheads 564, 540. $3,96,000 in finance. 3,96,000 in finance. 564, 540 minus 3,96,000. Difference is still plus 168, 540. Difference is still 168, 540. Since it is plus, it is to be added. After admin, I have opening stock in costing 1,50,000, opening stock of finished goods 1,50,000 in costing, and in finance it is 1,06,250. It is 1,06,250. Again the difference is positive 43,750. Difference is positive, it is to be added. Then my next item is a credit item, closing stock of finished goods 144,794. 144,794. And in finance you have closing stock as 91,300. As finance you have closing stock 91,300. So 144,794 minus 91,300 you have positive 53,494. You have positive 53,494. Credit side item it is. Now please remember, for credit side item, reverse the treatment. It is to be subtracted. Now same thing is to be done for all other items like this. I'll explain one by one. Selling and distribution as per costing, as per finance. Difference is negative. It is to be subtracted. And then you have 4 items not recorded in costing but recorded in finance. Out of 4 items, first 2 are credit items. If first 2 are credit items, answer is negative. Since they are credit items, we'll have to reverse the treatment and we'll have to add them. And then I have final 2 items, 2 expenses which are not recorded in costing but recorded in finance. Now when you record them, your answer is again negative. This time it is positive item, so it has to be subtracted. Now just verify your answer on Calci. Your starting point was cost records 150,964. 150,964. Now wherever you have written add, only those items are to be added. Please do not go by signs, because see here, you have marked it as plus, but you have subtracted it. Don't go by signs, go by words. Signs are deceptive. So add all add items on Calci. 168,540, 43,750, 76,000, 92,000. And then subtract all less items. 53,494, 68,310, 36,000, 2,44,000. 139,450 you are getting as an answer on Calci, which is your financial profit. Are you guys clearly understanding this? See, the working note part is very simple. Don't stress yourself. Do whatever is done. Don't do whatever is not done. And please understand, your starting point is costing. Start with costing, then finance. If your starting point was finance, you would have started with finance, then we would have written costing. And costing figure is in costing records, finance figure in finance record. Find out the difference. If the difference is positive, it is to be added. If the difference is negative, it is to be subtracted. But when you deal with a credit item, positive difference is to be subtracted and negative difference is to be added, only for negative items. You can take the screenshot of this and you can prepare reconciliation afterwards. Yes. So, as far as reconciliation is concerned, you already have reconciliation in the solution. So, I wanted you to understand very important point that for financial records, they have asked us to prepare a statement of profit. And for costing also, they have asked us to prepare a statement of profit. So, we prepared statements. You can't go for an account and you can't go for any other statement when you have a cost sheet as a statement with you. Of course, you will write a few notes later on. Interest received and rent received are ignored because they are not related to the product. Bad debts is ignored because it is a financial expense. You have to write a note that alternatively, it can be treated as selling and distribution as well, because bad debts is an outcome of credit sales. So, bad debts is ignored because it is a financial expense, but alternatively, it can be treated as selling and distribution over it. And dividend is ignored as it is an appropriation of profit. When you ignore something, you have to write a note. Please don't forget that. When you ignore something from the question while preparing cost sheet, you will have to write a note. So, that's what we have got. Look at the reconciliation statement. They have added a few items. You don't write like this. You always mention interest received, ignored in cost records, rent received, ignored in cost records. Don't write like them. Is this clear? Dividend ignored in cost records, bad debts ignored in cost records. This is what you need to understand. So, that was your question number 6. Let's go to question number 8 now. The following information is furnished by ABC company for process 2 for its manufacturing activity. The best part is there is no opening WIP. Units transferred from process 1, 55,000, expenditure debited to process 2. Consumables, stores and overhead. So we have 4 different types of expenses. For me, it is material introduced, then I have consumables, then I have labor and I have overheads. 4. Units transferred to the next process, 51,000. You don't have opening WIP. If you don't have opening WIP, that means your entire 51,000 must have got started and completed in the current year. So the completion stage of 51,000 will always be taken as 100%. Closing WIP completion stage is also given. Then we have unit scrapped. Scrap value is 5 rupees per unit. Normal loss is given to be 4% of units introduced. How much we have introduced? 55,000. 55,000 introduced, 4% is 2,200, which is a quantity, and that will be sold for 5 per unit. So guys, we are supposed to prepare equivalent production statement, cost per unit, and then prepare process 3 as well. Now see, your statement of equivalent production will include only those items which are to be recorded at cost. Now, you just simply follow the format that you have followed. I am just explaining the concept here. 51,000 is 100% completed. Closing WIP completion stage is mentioned. And we have abnormal gain. Abnormal gain is additional finished goods. Guys, you expected normal loss to be 2,200. You expected normal loss to be 2,200, but your actual wastage is only 2,000. You expected normal loss to be 2,200. You expected your wastage to be 2,200, but you have actually seen the wastage to be 2,000. That means your wastage, actual wastage is less than the estimated wastage. That means there has to be an abnormal gain of 200 units. Any which way, when you prepare process account, you will get that as a balancing figure on the debit side. So 200 is abnormal gain. Abnormal gain is additional finished goods. So it is always taken as 100%. Abnormal gain is a finished product, additional finished goods. So it will always be taken as 100%. And abnormal gain is always recorded on the opposite side. Abnormal gain is always recorded on the opposite side of output and closing WIP. Output and closing WIP are recorded on the credit side, but abnormal gain is on the debit side. So it will always give you the negative effect. It will always give you the negative effect. So that is why it is to be considered. Normal loss, as I always say, there is no need to even mention normal loss. Any which way you are writing dash in all columns. You will write only those items which are to be recorded at cost, which is output, WIP and abnormal loss or abnormal gain. Nothing else should be recorded. Now, you have material cost, you have raw material consumed. From that, you are supposed to subtract normal loss, because normal loss is a residue of material. Normal loss is a residue of materials. I'll show you. 327,800. 327,800 was your material cost. Your wastage will always be part of your main raw material. Please try to understand this. Your wastage has got nothing to do with wages and overheads. That is point number 1. Your wastage has got nothing to do with labor and overheads. Your wastage will be residue of material. Then why not consumable? Why not material added? Guys, you have quantity of normal loss. Now, if you have quantity of normal loss, it will be forming part of only that material which has a quantity. Your raw material introduced has quantity. Your consumable, your added material doesn't have a quantity. So you have two materials, one having quantity, one not having quantity. Then naturally your wastage has to be from the material which has significant quantity. You can read my notes, you will come to know. So 2,200 wastage into 5, 11,000 is subtracted here. That will be divided by respective equivalent quantity to give you CPU. And later on, if you see closing WIP, it is 2,000, 1,600, 1,200. So 2,000, 1,600, 1,200 will be multiplied by 6, 3 and 2. And the last one is 1 over it's simple. Abnormal gain. Abnormal gain will not be a proxy. They have not asked, but then still 200 multiplied by total cost of 12 per unit. That can be done. Equivalent production will not be a problem for you. Just solve jksc material. That will be more than enough. I'm not getting into much detail because each one of you must have studied this by under a different faculty. The methods can be different. I'm simply giving you the concept because everyone I'm sure must have taught in a fantastic manner, but still I'm just giving you a concept here. So I don't want you people to get confused by my method. So I'm just discussing the concept. My equivalent production will have only those items which are to be recorded at cost. So that will include only output, WIP and abnormal gain. Abnormal gain being an item of the debit side, opposite side it is subtracted. And abnormal gain is a part of additional finished goods. If it is an additional finished goods, that means it is 100% completed. Normal loss must be subtracted from the raw material introduced, the material which has a substantial quantity, because if your normal loss wastage has a quantity, wastage has to be part of some material having substantial quantity. And then finally just simply take this and do multiplication. 2000, 2000, 1600, 1200. 2000, 2000, 1600, 1200 multiplied by 6321 into chintu pintu. Your work is done. Array, is that clear? It's not going to be a big deal for you guys. Clear? That was your question number 8 of which was based on process costing. Question number 9 is again a simple question. Joint product, byproduct. A factory producing article A also produces a byproduct B which is further processed into finished product. The joint cost is given. I am concerned with 10,000. Subsequent cost, further processing cost is 5,000 and 3,000. I am not interested in breakup. Selling price is 16,000 and 8,000. Estimated profit is 25% and 20% on sales. Assume that selling and distribution expenses are in the proportion of sale price. Show how you would apportion joint cost and prepare a statement showing the cost. Boss, selling and distribution overheads are to be split in the ratio of selling price. But first of all, you need to know selling and distribution overheads. You need to know selling and distribution overheads. They have not given you selling and distribution overheads, but you can easily find it out. See, your sales of A is 16,000, sales of B is 8,000. Profit is 25% on sales and 20% on sales. So 12,000 plus 6,400. 12,000 plus 6,400 will be the total cost, right? 12,000 plus 6,400 must be the total cost, combined cost of A and B. From that I am subtracting production cost which is 10,000. From that I am subtracting even 8,000 which is further processing cost. Oh my God, I am left with 400 as a balancing figure which is my selling and distribution overheads. It's that simple. I have sales, I removed profit, I've got total cost of A and B. Total cost of A and B, if I combine, I get a total cost for the manufacturer. Out of total cost of the manufacturer, I am deducting joint costs and further processing costs, and I am left with 400 as a balancing figure which has to be my selling and distribution overhead, which will be distributed in the ratio 16:8, that means 2:1. Are you getting me? And now we can follow the reverse direction to find out joint costs allocated. See how we can do it. From sales, you remove your profit, you are getting cost. From cost, see 400 is in the ratio 2:1. 16:8 is the selling price ratio. That means 2:1 is the selling price ratio for 400. You allocated 400. You also subtracted further processing cost and you got joint cost as an answer straight away. You understood this? 400 was a balancing figure which was a selling and distribution cost which was split in the ratio 2:1. And the work is done. See, that is what they have done. There is no need to go for any other calculation now. Now, the next question, question number 10 is about service costing. P Holiday Resorts offers 3 types of rooms to its guests: deluxe, super deluxe and luxury. You are required to ascertain the tariff to be charged to the customer on the basis of the following occupancy. Deluxe is occupied 90%, super deluxe is occupied 75%, luxury suite is occupied 60%. Rent of super deluxe room is to be fixed as 2 times of deluxe, and luxury is 3 times of deluxe. So, if I assume this to be x, this will be 2x, this will be 3x. Annual expenses. Now, just get the total of all expenses: staff salaries, lighting, repairs and maintenance, linen, laundry charges, and interior decorations, sundries. The attendant for each room was provided when the room was occupied, and he was paid 500 per day. So, he was getting 500 per day per room. There are 360 days, guys, please understand. There are 360 days in a year. How much is occupancy? The occupancy is 90 rooms, 45 rooms, 24 rooms each day, and you will be paying that guy 500 per day for 360 days. Are you understanding this? So, this can clearly give you wages of room attendant. Are you clear with it? So, 90 plus 45 plus 24 into 500 into 360. $286.2. See, per room per day you are paying, no? So, you calculated total room days. See, 100 rooms, 60 rooms, 40 rooms into 360 into 90% into 500 rupees. Khatam. Finished. So, you can go by any method, you can follow their method, you can follow my method also. In my method, what I have done is, I will first calculate room days because I will need room days later on. So, 100, 60, 40 into Chintu, 90%, 75%, 60%. So many rooms are occupied per day. How much for 360? That's my room days. 360, 32,400 room days, 16,200 room days, 8640 room days. Advantage of this is later on for getting hotel charges, for deciding the amount to be charged to the customer, you need any which way room days. So, 90 rooms are occupied for all 360 days, 45 rooms are occupied for all 360 days, 24 rooms are occupied for all 360 days, and for each day 500 will be paid to the attendant. So, this will give you separate answer. Room days, you can always prepare separate working note. So, 8640, 16,200 and 32,400. 57,240. 57,240 into 500. 286.2. Okay. Why am I using this? See, you will get the total. You will get the total. Okay. You will get the total cost. You have depreciation also, no? So, depreciation can also be charged on these cost structures. Get the total cost. Once you get the total cost, 25% on takings is 1/4 on sales. profit is 1/4, 25%, 25 upon 100, 1/4 on sales. 1/4 on sales means when sales is 4, profit is 1, that means it is 1/3 on cost. You can apply 1/3 on cost, add profit. Once you decide the rent to be collected from all customers, you should be knowing this. If we charge X here, this will be 2X, this will be 3X. So eventually 32,400X will be the collection, 32,400X will be another collection, and 8640 into 3. $90,720X will be the total collection. Array, have you understood this? That is why I have calculated room days separately. When I have room days separately calculated, I can apply 500 on that to get room attendant charges, and I can use the same room days data to decide revenue. I'm charging X, 2X and 3X. So 90,720X must be the total collection. 90,720X must be equated to the sales value that you calculate. $90,720X must be equated to the quantity that you calculate, the amount to be earned. And you can easily get the answer. See, don't go by their method, it's not worth following that method. They have a cost of 1666.98. $1,666.98 is the cost in lakhs. $1,666.98 divided by 25% on cost is the profit. So your revenue should be 2222.64. In the same table you can show, see, I'll just amend this table, you will understand it in a better way. We don't want all this stuff. This is cost plus profit, amount to be collected, takings. If this is 100, this is 25, naturally this is 75, ding 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 ding, ding 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 ding. Cross multiplication will give you 2222.64. This will be total collection, which is equal to 90,720x. Answer lakhs mein aayega, so that will give you 2450. Your answer will be in lakhs. So if your total collection, as we calculated it to be 90,720x. 90,720x actually should be 2222.64. That will give you value of x, and remember all these figures are in lakhs. So the value will be 2450. So the value will be 2450, double, triple. There is no need to show anything like that, just simply take the total cost, add profit, decide the amount to be collected. As I have already explained, your amount to be collected is nothing but, your 90,720 x. That is the advantage of calculating room rent separately. I hope this is clear. Standard costing. Question number 11, standard costing. They have given you quantity produced and sold. So the actual output is given, standard rate is given, actual hours are given, standard hours are not given, but labor efficiency ratio is given, labor rate variance is also given. Now again, this is a reverse question, and I have told you clearly, whenever they ask for a reverse question, something which is normally given will be missing, and therefore something which is normally not given will be given. That's the simple idea. That's the simple uh, way. That's a simple crux of handling any reverse question. Something which is normally not given is available, and that is why something which is normally given is missing. So, we will consider that as a base. I will first go for labor rate variance. Rate variance is 68,376. Labor rate variance 68,376. 68,376 adverse. If you are saying it is adverse, that means your standard rate must be lesser than the actual rate. Your actual rate of wages must be more. That means if standard rate is less, actual rate is more, your answer will be negative. And then standard rate we have, actual rate we don't have, and actual hours are also available with us, 17,094. We have solved this in the textbook also. So, this will be minus 4 is equal to 8 minus actual rate will be 12. Got it? Your efficiency ratio based on hours is standard hours upon actual hours into 100. If this is 105.6, if this is 105.3, if this is 105.3, if this is 105.3, standard hours we don't know, actual we know. So, standard hours will be 18,000. Simple. Start with something which is normally not given. That is a crux of cracking down. That is a crux of cracking down. That is a crux of cracking down reverse questions. Are you getting me? So, rate variance gives me actual rate. Efficiency ratio gives me standard hours. After this, simply find out efficiency variance. The work which was supposed to be done in 18,000 hours, you completed work in 17,094 hours, you took less hours, that means the variance is favorable. We don't need formulas to solve standard costing, you already know that. None of the questions, in none of the question we have used formula. Let them do anything. We have always done it on a logical basis. 18,000 is what I should have taken, 17,094 is what I have taken. And since it is a responsibility, efficiency variance is a responsibility of workers, I cannot apply actual rate because actual rate is not a responsibility of workers. If you take actual rate, that means you are holding them responsible for actual rate as well. So, we have to go back to standard rate. And then finally, standard hours 18,000, standard rate 8. That will give you standard cost. Actual hours 17,094, actual rate 12. That will give you actual cost. So, guys, standard hours into standard rate and actual hours into actual rate is bound to give you standard cost and actual cost. Both will be divided by 6,000 to give you the labor cost per unit. Is this clear? Have you clearly understood this? Yes, very good. So, we have solved this in the classwork of jksc. So, you can get the solution there. Reverse question, please understand, something which is normally given will be missing. That is why something which is normally not given will be given. So, in this question, standard hours were missing, actual rate was missing. So, that is the reason they gave us rate variance and they gave us efficiency ratio. Rate variance was adverse, that means something bad has happened. Something bad happens when your actual rate is more than your standard rate. Something bad happens when your actual rate is more than the standard rate. So, your actual rate is more, standard is less. So, standard minus actual, when you do, your answer is negative. Accordingly, you have got the answer. So, that was your standard costing question number 11. Now, We have marginal and budgetary left with us. Question number 12. A dairy product company manufacturing baby food with a shelf life of 1 year furnishes the following information. On 1st of April, the company has an opening stock of 20,000 packets whose variable cost is 180 per packet. In 22-23, production was 1,20,000 packets, and next year it is expected to be 1,50,000 packets. Expected sales for 2023-24 is 1,60,000 packets. In 22-23, fixed cost per unit was 60. In 22-23, when the quantity was 1,20,000, your fixed cost is 60. That means 120 into 60, 72 lakhs must be your fixed cost in the first year. This is expected to increase by 10%, so it will be 79.2 lakhs in the next year. We have fixed cost of 60 per unit in the first year. In the first year, quantity was 1,20,000. That means definitely that rate was calculated on 1,20,000. So 72 lakhs is a fixed cost of the last year, 10% rise. That means it is 79,20,000. Variable cost is expected to rise by 25%. Your variable cost was 180 per unit earlier, and now it is going to rise by 25%. That comes to 225 per unit. That comes to 225 per unit. You're required to find out break-even point. Selling price is also given to be 300. We are supposed to find out break-even point in terms of units in 23-24. Now guys, break-even point is something which will recover your fixed cost. Okay. In the next year, your fixed cost is going to be 79,20,000. If your fixed cost is going to be 79,20,000, you guys already have 20,000 units of opening stock with you, which will be sold in the current year. Selling price is 300, variable cost was 180, so contribution of 120 will be given by these 20,000 units. So out of 79,20,000 fixed cost, 24 lakhs will be given by opening WIP only. How much more we need to achieve? 55,20,000 we need to achieve more. Correct? In the second year, your fixed cost is 79,20,000. You want to achieve that. But I think out of 79,20,000, 24 lakhs you are any which way recovering by selling the opening stock which is already produced. So you want to produce some quantity which will give you contribution of 55.20 that will recover the balance fixed cost. Your current selling price is 300. Your revised variable cost is 225. So 55,20,000 divided by 75. 73,600 units more I need to be produced. So my total break-even volume will be 73,600 plus 20,000 opening. 93,600 is my break-even quantity, but I will have to produce 73,600. Fresh. Are you getting me? This is what they have asked. And done. It's over. You understood this? Fixed cost was 72. It went up to 79,20,000. Break-even point is something that recovers your fixed cost. My opening stock is any which way recovering fixed cost of 24 lakhs. Balance fixed cost 55,20,000 must be recovered by producing a fresh quantity in the next year. Fresh quantity of the next year is having a different contribution because selling price is same 300, but variable cost has gone up to 225. So contribution per unit is now revised contribution per unit is only 75. which tells you that 73,600 must be your quantity to be produced plus 20,000 openings. So, your total break-even point is 93,600. That was your answer is. In part B, they have asked you variable cost is 12 and 14, selling price is 20 and 12. So, contribution is 8 and 6. Fixed cost is 30, 21, capacity is 4 lakh 30 and 5 lakhs. Anticipated sales next year is 4 lakhs and 4 lakhs. Identify the process that gives more profit. Simple profit calculation is required to be done. Your contribution is 8 per unit, 4 lakhs, so 32 lakhs. 4 lakh units you are planning to produce, 8 per unit is your contribution, 32 lakhs will be your total contribution, 30 lakhs fixed cost. When you subtract, you are left with profit of 2 lakhs. And here 4 lakh units into 6, 24 lakhs will be your total contribution minus fixed cost of 1 lakh will give you 3 lakhs as profitability. So, if you talk about profitability, process B is giving me more profit. Second part says, would you change your answer as given above if you were informed that the capacities of the two processes are as follows? Now, if your capacities suddenly increase from 4 lakh 30 to 6 lakhs and from 5 lakhs, it is 5 lakhs only. So, there is no change in the capacity of second process. Now, if there is a change in the capacity, that means probably there is a change in the demand. That is a silent assumption is to be made here. So, currently, we can always do the same calculation, 4 lakh 30 into 8, 5 lakh units into 6, that will give me total contribution minus 30 lakhs. So, 4 lakh 30 into 8 minus 30 lakhs, 4 lakh 40,000 is my existing profit and 9 lakhs will be my existing profit. Now, since they are expanding the capacity, that means there is a demand. That is what the assumption is. Why would you otherwise expand the capacity if there is no demand? See, when the demand was 4 lakhs and 4 lakhs, capacity was 4 lakh 30 and 5 lakhs. But now, if they are expanding the capacity, that means there is a full-fledged scope of selling all the units you produce. So, instead of 4 lakh 30 and 5 lakhs, now if the capacity is 6 lakhs and 5 lakhs, 6 lakhs into 8 will give you 48 lakhs as contribution minus 30. So, 18 lakhs and 5 lakhs into 6, this will remain 9 lakhs only. So, yes, my answer would differ. I will choose process A if my whole capacity can be sold. Whatever I produce gets sold, I will go for process A. Otherwise, I will be stick to my last answer, process B. Simple. You understood this was marginal costing for you. The only assumption you should remember is, if you are increasing the capacity, that means there is a demand which will fulfill your capacity. Why would you suddenly increase your demand from 4 lakh 30 to 6 lakhs if there is no demand? So, I am assuming that 4 lakh 30 is what I could have sold. Since there is a huge demand, I extended the capacity. So, instead of selling 4 lakh 30, I will sell 6 lakhs. Simple. You can do it orally also. Instead of 4 lakh 30,000 units, you are selling 6 lakhs more. In case of B, it's same. So, profit of B is not going to be different. So, whatever you are going to do, whatever is going to happen will happen only with A. Now, instead of 4 lakh 30, if you are selling 6 lakhs units more, 1 lakh 70,000 units are getting sold more. 1 lakh 70,000 units are getting sold more at the rate of 8, contribution will be 13 lakh 60,000. No extra fixed cost is same, no relevant additional fixed cost incurred. See, 13 lakh 60,000 is your additional contribution, you can find out a difference here. 18 lakhs minus 4 lakh 40, 13 lakh 60,000. You can do it orally also. But you understood the silent assumption here. If you are extending the capacity, that means there is a demand for extended capacity. If you are selling 1 lakh 70 more, 1 lakh 70 into 8 will be the total contribution, no additional fixed cost. So, that is an excess cost. 13 lakh 60 additionally you can earn. There is no addition in case of B, so I would go for process A if the second part is to be executed. Next one is budgetary control. X and Y company manufactures two products, namely X and Y, and sells them through two divisions, East and West. For the purpose of sales budget to the budget committee, following information has been made available for the year 22-23. Budgeted sales, East division, West division, quantities, selling price. Actual sales, East division, West division, along with quantity and selling price. Adequate market studies reveal that product X is popular but underpriced. Product X is popular but underpriced. It is expected that the price of X is increased by 1. Price of X is increased by 1. So, it will become 10. On the other hand, Y is overpriced. So, it will be reduced by 1. So, it will become 21 minus 1. It will become 21 minus 1, 20. The company management has agreed for the aforesaid price change, and on the basis of this price change and the reports of salesmen, following estimates have been prepared by the divisional manager. Guys, so instead of 9, the selling price will be 10, and instead of 21, the selling price will be 20. And there is a rise in the quantity as well. For X, it is East division 10%, West division 5%. 10% of this, 5% of this. So, now the revised quantity will be, 440, 630. 440, 630. Correct? 440, 630. Y 20%, 10%. Y 20%, 10%. 20%, 10%. This is 500, so 550. Understood this? Instead of 400, it is 440. Instead of 600, it is 630. Instead of 300, instead of 500. And in all cases, selling price will also be 10 and 20. With the help of the intensive advertisement, the following additional sale will also take place. Oh, so apart from that rise, there is an additional change. 60 and 70. 60 and 70 means 440 plus 60, this will be 500. 630 plus 70, this will be 700. 40 and 50. 40 means instead of 360, it will be 400, and instead of 550, it will be 600. That will be the revised quantity now. So, because of change in the price, the quantity has changed, plus there is one more additional change given. We are not concerned with Y. First is basic change, second one is special change. You are supposed to prepare a budget for the next year and also show budgeted sales and actual sales of next year. Okay. So, remember this 500, 700, 400 and 600. See, 500, 700, 400, 600. Since it is X, it is at 10. Since it is Y, it is at 20. This is your budgeted data. And this will now be compared with the actual data. And this is what your actual data is. You have 500 and 700 at 9. And you have 200 and 400 at 21. This is what they have mentioned in the question. This is your actual data. This is your revised budgeted data. This is your budget for 22-23 as they have asked. It is a simple calculation of the given data. This is revised data with the revised quantity, revised price, and this is your actual budget. There is nothing to be done in this apart from this. You understood this? 9 was your original budget. It will go up to 10. So my revised budget will also have 10. 21 was original budget, revised will be 20. So this was my original budget, answer as per original budget. This is my revised budget, answer as per revised budget. And this is my actual data on the basis of the actual data given in the question. It's not a big deal. This is all given in the question. So what have they asked for? Budget for next year, this is revised budget plus budgeted sales and actual sales of the current. Budgeted sales and actual sales for the current year is this, and revised is this. Simple. Trust me, it was absolutely simple task to handle this. There was nothing great in this. I hope you guys are clear with it. There were two changes. One is the percentage change which is mentioned, and second one, it's an additional change which was anticipated due to advertisement. You should know one thing, that whenever you want to enhance sales, there are two methods available. One is huge advertisement and second one is reduction in selling price. Change in the selling price can also increase the quantity, plus advertisement can also create positive impact in terms of quantity. This is an impact of pricing, this is an impact of advertisement. We are not bothered about it, we incorporated both. Is that clear? The last part is what is cost plus contract. This theory is very simple. See, I'll explain quickly. Cost plus contract means where you asset and contract price by simply adding percentage to the cost of work. You don't decide contract price earlier. You simply maintain record of the cost. You tell your client, see, this is going to be the cost. Either you get material, produce the bill, or else I will get the material, I'll produce the bill. At the end of the period, we'll take the total of the cost. My profit will be 15% on cost. That is cost plus contract. So it is not possible to estimate the contract cost with a reasonable accuracy, because we are not bothered also to know the selling price well in advance. The fixed percentage is given to the contractor. That is a biggest advantage. I know if you spend 1000 or you spend 1 lakh, I am going to get 15% of it. So I know my remuneration part. Secondly, it is useful especially when the work is to be done is not definitely fixed at the time of making the estimate. I don't know what exactly you want. Okay, you have given me the basic scenario. You want the building to be done in this way, and then you are saying, nay, you construct the building and then probably 2 BHK will be merged together, or probably 1 BHK, 2 BHK will be merged together, and I'll arrange that as, I'll convert that into office. You do whatever you want to do. Let me construct the superstructure first. Internal work, bricks and all, walls and all. We can sit and discuss later. So I'm not sure what exactly my client is going to do, but I'm not bothered also, because whatever he does, any cost incurred by him, I'm going to get 15%, 20% on that. So when I'm not sure about the work to be done, this is the best method. And secondly, the contractee can ensure himself that about the cost of contract, as he is empowered to examine the books and documents of the contractor. So even he will not be having a suspicion. I told you, you get material, produce the bill, or else I'll get the material, I'll produce the bill. So you will be having access to my books of accounts. You will get to know how much cost I'm incurring. You feel that you can get the material at a cheaper rate, you do it your way. I don't have any problem. Ultimately, you get bill. If I purchase the material, I'll get the bill. We'll keep it in front of us. Add 15-20% profit. That is what I need. Is that clear? Next, objective of cost accounting. First is calculating cost. Naturally, determining selling price, cost control, cost reduction. Any resource, if you want the best out of the resource, you need to control the resource. If you don't have a control over the resource, then there is a wastage, and if there is a wastage, not all wastages can be charged to the customer. And cost reduction is something which is permanent reduction in the cost without impairing the quality of the product. So both these functions can be used in cost accounting. Secondly, I can find out profit of each activity. Since I have an access to the cost structure of each and every activity that I undertake, each and every process that I undertake, I can easily find out profitability of each activity. And then assisting in decision making, all decisions whether to increase the price, reduce the price, starting a new product line, discontinuation of one of the product lines and all that, all these things can be done. Now idle capacity. First of all, what is idle capacity? See, I have a product, I have a machine which can produce 1000 units per day. I have a product which can produce 1000 units per day. So in 365 days, I can produce 3,65,000 units. But that is my maximum capacity because I am not considering the potential time loss. Nobody works for 365 days. Workers still on the basis of shifts, over time you can make them work. How will machine work for 365 days? So when I realize after considering Sundays and statutory holidays, Diwali, Dashera, Eid, Gandhi Jayanti, Buddha Purnima, Christmas, on all those holidays, I realize that at the most 300 days can be worked. So 1000 into 300 becomes my practical capacity. So what is the difference between maximum capacity, rated capacity and practical capacity? Maximum is rated, maximum is installed. What is the difference between maximum and practical? When you consider potential time loss, when you consider estimated time loss, you get practical, which is practically achievable. And if you are producing 2,50,000, then it is your actual capacity. Now you can clearly see maximum minus actual will give you idle capacity. I have not produced 1,15,000 units. But out of 1,15,000 units, nobody could produce 65 because it is not practically possible. So that is normal idle capacity, which is 65,000, which is maximum minus practical. That means balance 50,000 are considered as abnormal idle capacity, which is practical minus actual. 365 days, nobody works. Machine says 1000 units per day into 365. If I am doing, machine says 1000 units per day can be produced. Since I have 365 days in a year, my maximum capacity says 365,000 units can be produced. But when I consider potential time loss, I realize that maximum 3 lakh units can be produced. But I have produced 2,50,000. So when the capacity is 3,65,000, I have produced 2,50,000. I couldn't produce 1,15,000. That is idle, unutilized capacity. Unutilized capacity. So maximum minus actual is idle capacity. When I consider this part, I already know before even I start with the production process that 3,65,000 minus 3 lakhs. 65,000 nobody can produce because it is an infrastructural glitch. You buy a SIM card, you buy a mobile phone of 64 GB. You can't store 64 GB in that. So maximum capacity is 64, but practically is less than that. And you already know that you will not be able to store 64 GB in that. So something which is already known is normal. So normal idle capacity is maximum minus practical. But practical minus actual gives you abnormal, and you should have a reason for this. Now my reason probably there is no demand more than 2,50,000, so I produce 2,50,000. So I will be answerable only for abnormal. Now what are they saying? Idle capacity cost, how it is treated in books of accounts. If it is due to unavoidable reasons means they are natural reasons, they are normal reasons. If they are normal, they will be charged to the production capacity, they will be charged to the customer. But if it is due to avoidable reasons means faulty planning, poor management, instead of effective planning, there is a defective planning or there is a failure of the management. If something of that sort happens, if your anticipation, if your expectation of quantity is is wrong right from the beginning, and if you get an idle capacity, that cannot be charged to the customer, that has to be charged to costing P&L. Logical it is. Normal loss is unavoidable. Normal loss is a natural loss, right? You crush, I crush, we both crush groundnuts. We all will get wastage. Nobody can avoid it. So, because it is natural tendency of the material to give you the wastage. So, if your idle capacity is due to unavoidable reasons, that means it is normal. Avoidable means abnormal. So, avoidable is always due to external factors, other factors than my routine factors. So, that could have been avoided. That means it is abnormal. If it is abnormal, costing P&L. Okay, if it is due to trade depreciation and all, again it is abnormal. It is transferred to costing P&L. And if it is due to seasonal factors, it will be charged to cost of production by inflating the overhead rate. Seasonal means what? Ultimately, you will also have the benefit of season. Your competitor will also have a benefit of season. Like if you consider Mumbai to Goa bus route, all bus services increase their bus fare. So that means ultimately it is charged to the customer only through overheads. You understood this? Yes. Lovely. Treatment of under over absorption they have asked. Guys, this idle capacity I have already discussed. This was the last question of absorption costing. Last question in the textbook of absorption costing, and I have given you this note. I have discussed this with you. Idle capacity. Same thing is asked. Correct? Now, whenever there is an under over absorption, it needs to be treated in a proper manner. Under/over absorption. Under/over absorption can be a significant amount or it can be a insignificant amount. If it is an insignificant amount, it's a petty amount, don't waste your time and talent on that, transfer it to costing P&L. But if it is significant, then there can be two things, either it will be normal under over absorption or it will be abnormal. Abnormal is due to failure of the management, poor thinking of the management, poor estimation of the management. That means this will happen only in your case. This will happen only in your case. It will not happen with the competitor. So in that case, you charge that to the costing P&L because you have to bear the burden. One more option you have, you can carry it forward to the next year. Current year's under absorption will be carried forward to the next year with an intention of getting over absorption in the next year. Current year's under, next year's over. It will be set off. What if there is no over absorption in the next year? Third year, going concern, basic fundamental accounting assumption. People don't do this because if there is an under absorption, remember your cost is less in books. If there is under absorption, you have absorbed less, you have recovered less, you have charged less, your cost is already less. That means your current year's profit is inflated profit in books. If there is an under absorption, your cost is less, profit is more, profit is inflated, your profit is inflated in the books. By carrying it forward to the next year, you are not adjusting current year's profit. On the contrary, you are affecting other profits, next year's profit. So the best option is apply supplementary rate and threefold effect. We have this question number 3 in jksc material. Question number 3, I have done it in detail, all journal entries, accounting treatment, everything I have explained. You have to consider supplementary rate. You get your supplementary rate and then it will be adjusted through cost of sales, finished goods and WIP to the extent of quantity sold, closing stock of finished goods and WIP quantity. I have also given you journal entries. I have also shown you the accounting effect of it. Question number 3 of JKC you do, supplementary rate will be taken care of. So what is the treatment of under absorption? Either costing P&L or carry forward or supplementary rate. See, costing P&L, supplementary rate, carry forward to the subsequent year. You can copy this chart if you want. I have already given you this chart in detail in absorption costing. You can get it there. You can get it from that. Everything is mentioned in detail. Nowhere it was mentioned, still I did it. Now see, it is there in RTP. Nowhere it was mentioned, we did it, and now it is in RTP. So, it can be there in exam also. So, you can't have thought process that this will not be asked, that will not be asked. Ideal capacity was just in a theory, still I covered it in the class. This same example I had given you. So, ideal capacity is something which is already covered. It was not asked in that question, but still we covered. Similarly, this chart will help you out. This chart is given to you just before question number 3 in jksc material, in my solutions. And then last one, distinguish between cost allocation and absorption. Allocation means allotment of cost to the item, like products or departments. Absorption means recovery. So, allocation is allotment of the whole item of cost to the cost center. In other words, it's a process of identifying, assigning and allowing cost to the cost center and cost unit, like power in the ratio of horsepower and hours, a rent in the ratio of floor area, lighting in the ratio of light points. If you don't have information about light points, then you can also consider area, because larger is the area, more light points will be required, smaller is the area, less number of light points will be required. Then that is allocation. Absorption means converting all per annum cost into per unit cost. So, absorbing all indirect costs and overhead costs allocated or apportioned over particular cost center by the units produced. Like when you have a common cost and when you allocate that common cost to various departments, that is allocation. And once you do the allocation, you get the total. One is divided by machine hours, second one is divided by labor hours, third one is divided by material cost to get the percentage, and you get absorption rate, which is later on applied. That is absorption, that is recovery. Recovery, where you convert per annum into per unit. You convert your period cost into a product cost. But allocation means when you segregate total cost into various parts. So, that was your RTP, guys. I think we have covered everything, trust me. Just go through our notes. We have covered more than what is required. Nothing will go wrong. Have faith in us. You are supposed to do jksc material first, then ICI study material, and then RTP, MTP. Things will be taken care of. Thank you so much, guys. It was great teaching you all, and I really enjoyed it. Thank you so much. All the best, and we are all there. Helpline is there. We all are there for you. Whenever you need us, just contact us. Thank you so much. Have a nice time.